Okay, I am going to be walking through Advanced Scenario 5. It's found in Form 6744 on what page is this? 73. So I'm just going to read through the interview notes. We have the interview notes as well as the filled out intake interview and quality review sheet. So I'll read through these and then we'll refer back to them a little bit. I probably won't come back to this page a lot, but we will need this information to fill out the return. So, we have Samantha. Her husband died in March of 2016. She filed a joint return with her husband for that year. She is not remarried. In September of 2017, Samantha's daughter Meredith enrolled in college to pursue a bachelor's degree. She had no previous post-secondary education, and UMA College, where she attended, is a qualified educational institution. Meredith does not have a felony drug conviction. Samantha brought a Form 1098-T and an account statement from the college. Meredith's purchases at the college bookstore were for course-related books. The terms of Meredith's scholarship require that it be used to pay for tuition. Samantha took a distribution from her IRA and used all of the distribution to pay for some of Meredith's education expenses. All her IRA contributions were deductible in the year she made them. Samantha provided the entire cost of maintaining the household and all the support for her children, Meredith and Oliver, in 2017. Samantha's older brother, Howard, lives with her and is permanently and totally disabled. He received disability income, which he used to provide more than half of his own support. Samantha lost her job in December 2017. She received unemployment for 2 weeks in 2017 until she found a new job. Samantha provides translation services to earn extra income. She received a Form 1099 miscellaneous for all the translation income. Her only expense related to this income was $150 in office supplies. Oliver attended daycare while Samantha worked. Samantha received a 1099-C for canceled credit card debt. Using the insolvency determination worksheet in the publication 4012, you help Samantha determine the value of her assets exceeded her liabilities and that she is solvent at the time the credit card debt was canceled. Samantha, Meredith, and Oliver had MEC all year through Samantha's employer. Howard also had MEC all year. Okay, then we have their social security cards right here. And now we look like they have everything we need to start. So we're going to go to the practice lab. Go to practice area. This is after you've logged in already. So we will now start a new return right here. We're just going to do the basic, no profile. We have to create a new taxpayer. Okay, so we need Samantha's social security number. That can be found on her social security card right here. Samantha Rollins, 60100. Excuse me, 60100. And then we just put in whatever we want for the last one. I'm going to put in 2018 because that's the year that we're in now, so that's kind of fun. Just do something that you can remember from the first one because they turn into dots, so don't do just a random swiping of the keys because then you won't be able to figure out what it is. Okay, so the first thing we have to do is determine the filing status. So the way that we are going to do this is we will look at publication 4012. This is your VITA resource, your VITA Bible, basically. And if we scroll down to the table of contents, we can see tab B, starting return and filing status. So we're going to go to determining filing status, decision tree. So, were you married on the last day of the year? She was not. As you can remember, her husband died. Did your spouse die during the year? No, he died in 2016. We're looking at 2017. So, do all of the following apply? Your spouse died in 2015 or 2016, and you did not remarry before the end of 2017? Yes. In the year of death, were you entitled to file a joint return with your spouse? Yes, that was in the interview notes. You paid more than 1/2 the cost of keeping up the home for the required period of time? Yes. Your son or daughter, but not foster child or stepchild, lived in your home all year and was your dependent or would fully qualify as a dependent except that he or she does not meet the gross income test or does not meet the joint return test, or accept that you may be claimed as a dependent on another taxpayer. Don't include a grandchild or foster child. So all of those are yeses for Samantha. So that means we'll come over here, and she is a qualifying widower. So we'll go back to tax layer, and we can do qualifying widower with dependent child. Perfect. Next. Please enter the year of spouse death. That was 2016. Okay. So then we will just go through and enter in her information. And you want to make sure that you don't put in anything that is incorrect. Okay. So her date of birth is 15th of April. $1975, I believe. Check that really quick. 1975. Okay. She is a management assistant. Okay. So she cannot be claimed as a dependent on someone else's return. She was over 18, but not a student. She's not blind, she's not deceased. You've asked her if she wants to contribute to the presidential election campaign. She does not. Not combat zone. She was a resident. So those do not apply. So now we're just going to go ahead and fill in her address, and I think it was 300 Dakota Circle. No, that's not spelled right. How do you spell Dakota? Sorry, guys. Oh, I did. Dakota Circle, and then we're just gonna use Provo because that'll make it easy. You have to enter a phone number. They didn't give us one, so we'll just go 555-555-555. Okay. On to the next. Oh, so sorry about my cough. Do you have any dependents or qualified persons to claim on your return? Yes. So we're going to go through now because she listed that she has 3 people living in her home for the year. So first has her daughter Meredith, her son Oliver, and then Howard, who is her brother. So now we need to determine which of these can qualify as a dependent. So we're going to go back to 4012 here. And I'm just going to take us back up to the top really quick so we can look at that table of contents again. Sorry if this is making anyone dizzy at all. Wow, I'm sorry. Back to the top. There we go. Table of contents. Okay. Exemptions and dependency. Okay. So now we will see overview of the rules for claiming an exemption for dependents. So this is tab C, exemptions and dependency. Okay. So you can see here, what page are we on? C3. We want to scroll down maybe a little bit here. Dependency exemption. Okay. Table 1. So the first step is to determine, can you or your spouse be claimed as a dependent on another person's return? That is not true. So now we'll move into, we'll start with Meredith, I think is the first one. Yeah, Meredith Rollins. So we can see that she was born in 98, so that puts her at about 19. She has lived with her the whole year. She's a citizen. She is single. She was a full-time student, and she was not disabled. So those are going to be important information for us. It says, was the person married? No. Is the person filing a joint return? Oh, sorry. Is the person married? No. Go to step 4. Skip step 3. Was the person a U.S. citizen? Yes. Go to step 5. Was the person your son, daughter, stepchild? We already saw daughter, so yes. Go to step 6. Was the person under age 19 at the end of the year, or younger than you? Well, no. She's 19. She under the age of 24 and a full-time student? Yes, that is true. So yes, go to step 7. Did the person live with you as a member of your household except for temporary absences for more than half the year? Yes. Go to step 8. Did the person provide more than half of his or her own support for the year? No. Go to step 9. Is the person a qualifying child of any other taxpayer? No. You can claim this person as a dependent. So, Meredith, our first one, is a dependent. So we'll go back to TaxSlayer, and we will enter Meredith in. So with an I or an E? An I. Wow, I'm a better speller than I thought I was. Okay, Rollins. Birthday, sorry I have to keep flipping back and forth. 8/1/98. Her social security number, we're gonna have to scroll back up. Meredith Rollins, 60200. 60200, and then just do 2018 again because that was fun. Relationship, she is a daughter. Number of months, 12 months. So, check if the following: the person was over 18 and a full-time student at an eligible education institution. So we read in the interview notes that Yuma is a eligible education institution. She was not disabled. She's not your dependent. Okay, the rest of those we do not want to check, so we'll continue. Okay, now we have to determine if, who's the next one? Oliver is a dependent, so we'll go back to our decision tree. We already know we are not going to be claimed by someone else. He was not married, so we'll go step 4. He was a citizen. Step 5, son. Go to step 6. He was under 19. Perfect. Go to step 7. Did he live with you for more than half the year? Yes. Step 8. Did he provide more than half of his own support? No. We'll go to step 9. Qualifying child of any other taxpayer? No. Claim this person as your dependent. So great. Now we will go add in Oliver right here. Rollins, and his birthday is 4606. Nice. And social security number, 603. 2018. Okay. Relationship, he is a son. Lived with her for 12 months. Was not over 18, a full-time student, and none of these others apply, so just don't check anything. Okay. Next, we will determine if Howard is her dependent. So we see that Howard is a little bit older, so that might make him ineligible, but we'll keep looking. We're going to go back to our decision tree, and we see 1 we've already taken care of. 2, was the person married? No. Is the person filing joint return? No. Was the person a U.S. citizen? Yes. Was the person your son, daughter, stepchild, eligible foster child, brother, sister? Okay, so we hit brother. We're going to stop there. He was her brother. So yes, go to step 6. Was the person under 19? No. Under 24, full-time student? No. But here, any age if permanently and totally disabled at any time during the year? Yes. So we'll go to step 7. Did the person live with you as a member of your household except for temporary absences for more than half the year? Yes. Did the person provide more than half of his or her own support for the year? So this is where we run into a hitch, because yes, he did provide more than half his own support because of his disability payments. So you cannot claim him as a dependent. So Howard is not a dependent. We will go back to TaxSlayer and continue because she only has the 2 dependents. Alright, so now we're going to get into the income. Okay, so we'll scroll down. We can see where the income she earned is in this part 3. So the first one is wages or salary. If yes, how many jobs do you have? 1. So that means she's going to have one W-2. So we'll scroll down till we find the W-2 right here. Perfect. Come back over here. So you saw when we went to income, I put enter myself because we want to be able to see all the forms. So we go to W-2, begin, and then we'll just enter in all the information from the W-2. So we've got the employer identification number here, 34,600, and then we'll just make up a number, and then it should autofill. Let's make sure that's the right. Yep, Glimmer Corp, that's right. All of the address and everything comes in nicely here, so that's awesome. And then we just have to enter in the amount of money. So in box 1, we see 38,150. Okay, and then these will auto-populate, and we'll have to check to make sure they're right, but they should just auto-populate. And then federal income withheld. Okay, we'll make sure there are no other boxes that are checked or filled, and we see that here we've got 12A is full. 12A is the code, is a double D. And the amount was 8202. Sorry, I'm flipping around a lot, but this is kind of how you have to do it. And then box 13 is also filled out, has retirement plan checked. Any other thing? And then down here we can see the state information. So we'll come down here. We're just going to fill out the state identification number. So it's the same. Okay. And then $150 and the amount earned. Income tax 1472. And we will select our state, which in this case is Utah. And continue. We entered the, oh, whoops, okay. So, it wants us to fill in the state, country. We'll just do the postal code because it's easy. 84606, like that. Utah. It's odd it's asking us for that because it's not a foreign country, but we're going to do it anyway. The US is not at the top. Okay, hold on a second. Why is it asking us for a foreign? Oh, we accidentally clicked on the foreign address. That's the problem. So it's not a foreign address, and we're good. We can just move on with that. So sometimes it'll do that. It'll get mad at you, and you just have to go back and check a little bit. So since she only had one W-2, we can just move on from this section. We'll go back here, see what other forms of income she has. So she has scholarships for her daughter, and those we're just going to ignore for a minute because we're going to use those when we calculate the American Opportunity Credit. The self-employment income, she has a 1099 miscellaneous, so we're going to go find that 1099. Right here, 1099 miscellaneous from Kent Company. So we'll go back to tax layer. You can see here the form 1099 miscellaneous. Begin. Okay. So the payer is Kent Company, 38,300. 38,300, and then we'll just do 2018 because who doesn't love that? Is that right? Yeah. Okay, so we're gonna have to enter all of it in. Kent Company. Sorry, this takes a long time. 743 Cluquit Way. 743 Wait. Oop. Sorry, guys. Okay. Did I spell colloquial white? Wait. Right. Okay, there's no second L. Okay, zip code. We're going to use our own again. 84606. That'll fill. And then we've got Samantha's information here. And if we go back to the 1099, it'll show us what we earn the income for. We can see that it's under $7, non-employee compensation, so she did some work for them. They paid her, she was an employee. $7. Is that the right amount? Sorry, guys. Yep, right amount there. Okay, and that is everything under that 1099. So we'll move on. Okay, and then it's going to ask us if we need to create a new Schedule C from Schedule C income from business. So we say, well, I don't know what that is. Why would we need a Schedule C? Let's go look at the publication 4012. Let's hope that this time it won't be so scary and glitchy when I try to get to the table of contents. Okay, so right now we're under income. So we're going to look to see if any of these have anything to do with what we want. If we come over here, we can see that connecting the Form 1099 miscellaneous to a Schedule C. So we're going to go to D17, and it's going to say if it's self-employment, create a Schedule C. So it tells us to do that. One thing I want you to note is here it says caution to be carried to a section says none, the income is not being reported on the return. So if you don't have a Schedule C, it won't be attached to the return that we're making right now, which is the whole reason we're including it is because we want it to be attached to the return. So we do have to create a Schedule C, even though it's not her own business. Okay, so it's not a separate business name. We're just going to include business code. So this is where we have to identify what type of business she was in. And she was doing translation services for them, is what we read in the interview notes. I guess we can go back and look at that because that might have been a little bit more obscure. She provides translation services, so that was what the 1099 miscellaneous was for. And notice here she had to pay $150 of her own money for supplies. So that's going to come in handy in just a second here. So a good way to find it is just Control F because it's a really long list. Translation and interpretation services. There you go. Click on that. It'll fill. We can just continue. And then we want to include general expenses, supplies, $150. Continue, and then we are done with the Schedule C because that's the only expenses she had, and we're done with the 1099 miscellaneous. Okay, we'll go back to our intake sheet here. So we took care of the 1099 miscellaneous, payments from her pension, annuities, and unemployment compensation. So we have a 1099-R and a 1099-G. So we'll scroll down and find the 1099-R. Start with that, 1099-R. So in TaxSlayer, sometimes they're not super obvious. Here you can find 1099-R, but if you can't, I just type them in here. 1099-R. Take to 1099-R now, and then you can just fill it in. So again, we're just going to fill in the payer's information, which is Prairie Bank 3600. And then autofill, which is awesome. We love autofill. And then we'll check out the 1099-R to see which boxes are checked. We have, or which boxes are filled. So we have the gross distribution taxable amount, and then in 7 we have a check and a code 1. So we'll just put that there. 7 1. And there's the IRA. So this was her withdrawal, her early withdrawal from the IRA. Is what we look. IRA, is that right? Yeah, IRA is what we're looking at right now. And so we just included that. Okay, and so sometimes early withdrawals are non-taxable or exempt from the 10% tax if they are used for the right thing. So we're going to look here to figure out if it is exempt from that. So, sorry, I got a little distracted trying to figure out what I was doing. Okay, so we want to go to the 4012 again. Best resource. Oop, table of contents. Okay, and then we're going to look at, it's actually going to kind of fall under other taxes and payments. And then, so I'm just going to go to the beginning of it. Let's see if we can find something that's applicable. We have other taxes and payments continued, or early distribution. So this is what we want. So these are the exception codes. Okay, so here, IRA distributions made for qualified higher education expenses. So that means it will be exempt from that. So we'll just click here, qualified tuition plan, and continue. Okay, so we have that included. Awesome, good. And then continue again, get us hopefully back to the income screen. So now we're back on the income screen. And we had to fill out that 1099R, and now we want to fill out the 1099G right here. So I'm just going to search for it again. Easiest way, 1099G. 1099G box 1 now. Oop, there we go, sorry. A little bit slow. Okay. So we're going to fill in the payer information, 700. Okay. Oh, no autofill. Dang it. Oh. Hopefully if I make the right number, it will fill. Yes. Haha. Love that. Okay, so then it autofilled all the important information. Just double check that really quick, make sure it looks right. That looks right. Then we will fill in employment compensation and then the tax withheld. Okay, it doesn't look like any other boxes are checked or filled in, so we are done with that. Continue. Awesome. Just back to our income page. Okay, so let's see if she has any other forms of income before we move on. Took care of all of those. Other income, yes, she does. So she included a 1099C, which is where the other income came from. So we're going to go scroll down, see if we can find that 1099C. See where it came from. 1099C. Okay, so this was the forgiveness of her debt, I'm pretty sure. Yes, amount of debt discharged. Right here you can be seen under box 2. So we'll go back to tax layer, 1099C, another one that doesn't just show up here really easily. So we're going to search it. Take me there. Okay, the creditor's name is Prairie Bank. Did I spell Prairie right? Sorry guys, I'm like the worst speller on the planet. Okay, their number is 3600. Sure. Okay, and the amount of debt canceled was $800. Okay, cancellation of debt included. Okay, so now we have taken care of all of the income that she earned, except for the scholarships. We'll go back to that in just a second. We can move on to expenses. So Ooh, it's coming income. We want the income page, and then we'll go to the next. Okay, let's see how we can cut your tax bill with the expenses. So we'll just do enter myself again. And we can see here we have, okay, so the college and post-secondary education expenses, those will be helpful. We can use those with the American Opportunity Credit. Home mortgage interest, that is an itemized deduction, as is our real estate taxes. The child dependent care expenses, we'll use those in calculating the child care tax credit. And then the self-employment income, we already included those expenses when we filled out that Schedule C. So the only itemized deductions we're looking at here are the home mortgage interest and the real estate taxes. So the way it works, you can either take the standard deduction or the itemized deductions, and I think we're just going to, in this case, take the standard deduction because the mortgage interest and the real estate taxes will not exceed the amount of the standard deduction. And see if we can find them really quick. Because the interest is $5,000 and the taxes, where did the taxes go? Oh, real estate taxes paid are almost $900, so that's only going to get us up to about $6,000, and her standard deduction amount would be a little higher than that, so we're not even going to worry about entering those in because we know that she's just going to take the standard deduction. So we're just going to deal with credits right now. So the first one I want to do is the education credits. Education credits, begin. Okay, Meredith is the fill-in here. We're going to take the American Opportunity Credit. Okay, so this one we have to calculate how much is actually her qualified expenses. So we have her 1098T is what it's called here. Oh, no, just kidding. 1098T, yes, from her college. And we can see that she paid $6,300 to the college. And then she also received a $3,000 grant, scholarship, excuse me. And then here's another little statement from the college of some payments she made to them with the meal plan and the parking pass and the bookstore. So of these expenses here, the only ones that are qualified are her tuition and the books from the bookstore. So that means she's going to have $6,800 worth of expenses, but from that we have to subtract her scholarships, the $3,000. So it's going to be $3,800 that we're going to enter into this box right here. And then we'll have to fill in the school, Yuma College. Wow. You guys, I'm so sorry. College. Yeah, I know how to spell. No, I don't. Okay. Address. Whoa. 10 College Ave. See if I can get it right this time. Wow. Yeah. And we'll just use our zip code again. For Utah. Okay, so she did receive a 1098T. We saw it with our very own eyes. Did they have box 2 filled and 7 checked? Well, let's go check. 2 is not filled. Box 7 is not checked. So we'll say no. Your identification number, 37700, 2018. Have they claimed the Hope Scholarship credit or the American Opportunity Credit on 4 prior tax returns? No, they have not, because this was her first year at school. Was she enrolled at least half-time? Yes, she was. She complete the first 4 years of post-secondary education? No, again, this is her first year. Was she convicted of a felony for possession or distribution of controlled substance? She was not. Remember, it said that in the interview notes. We'll continue. All right, American Opportunity Credit claimed. Alright, the next one we want to look at is, I think it's the child care credit. So we've got, took care of that, we're not taking these, child care. Okay, begin. Okay, so we're going to add the child care provider, and we have a little paper talking about, there we go, the reverse child care here. So we're gonna throw them in here with their identification number. Maybe it'll autofill. Yes, it'll autofill. That's awesome. Okay, so make sure those are right. Okay. Amount paid. We see the amount paid is $3,000. Okay. We're not in Hawaii, but we are in California, so we do have to fill in the phone number. I don't know if it'll let us use the exact same one, so we'll put a 4 there. Okay, so we have the child care provider, and now we need to add in the dependents for who the care was for. So we have Oliver. So we're going to edit this because we have to include the amount that was paid for him, which is the $3,000. They have to equal each other. The amount you paid to the provider and the amount you paid for the dependents have to be the same. So we'll see the difference is 0 up here. If it's not 0, it will not let us do what we want to do. Okay. So this, we don't have anything. Oliver did not make any income, so we're just going to move past that. Okay, so that credit is also claimed. We'll come back up to here. Okay. Alright, so we already took care of all of those. The only thing we might want to look at here is, while we're on the subject of credits, we want to talk about Howard a little bit. What credits he qualifies as a dependent or a child for. So we're going to go back to our 4012. Sorry guys, if you're going to get dizzy, just close your eyes for a second. We'll be right back at the top. Okay, so the first one, this is actually one of the questions, so that's kind of why I'm going over it a little bit more. So we already decided he does not qualify for an exemption, but he might qualify for a the child tax credit. So we're going to go to G12, and it says qualifying child under 17 at the end of the tax year. Well, he's not under 17, so we already know that that doesn't work. We can keep reading, I guess, if you want. He was a U.S. citizen, claimed as your dependent, wasn't even claimed as our dependent. So we already know child tax credit is not going to work for Howard. So the only other option, sorry, scrolling again, is the earned income credit. And look, right here it is. I was gonna control F it because I didn't know where it was, but we found it really quickly. So with a qualifying child, so does your qualifying child have a social security number that allows him or her to work? Yes, go to step 2. Is a child your son, daughter, stepchild, adopted, or eligible foster child? Brother, there it is. So go step 3. Was the child any of the following at the end of the year? Under 18? No. Under 24 and a full-time student? No. At any age permanently and totally disabled? Yes. Go to step 4. Did the child file a joint return for the year? No. Step 5. Did the child live with you in the United States, with you in the United States for more than half the year? Yes. Go to step 6. Is the child a qualifying child of another person? No. So then it says compute the earned income credit using the appropriate worksheet. So yes, Howard can be her child for the earned income credit. It's kind of fun, huh? Alright, now we will move on to the next part. Let's look here. Okay, so we've already taken care of all of the income. And you see we took care of the scholarships when we included them in the American Opportunity Credit. And now we just have to move on to this part, the life events. And we actually already included the debt from a mortgage or credit card cancellation when we included that in income up here with the 1099-C, so we don't have to deal with that again. So I think all we have left to do is the health insurance section. No taxes there. Okay, wow, this is really making us go through lots of stuff. Okay, health insurance introduction. Start questionnaire. So, oh wow, sorry, my bad. Okay, did you or your family have health insurance at any time in 2017? Yes, we read that in the intake notes, and also you can see that in right here. Do you have health coverage? Yes. Awesome. Okay, was your health insurance purchased through healthcare.gov or state marketplace? Well, we can see here, no, it was not. They did not purchase it through there. Okay, so these are our household members. It asks us if we need to add anyone else for those purposes. We do not, so continue. Was your entire household insured for all the amounts? Yes, that was one of the last notes of the intake interview notes. They were all insured for the whole month, the whole year. Okay, congratulations, you completed your federal return. Awesome. So we'll continue to our summary. Calculating, and this is what it looks like. It's beautiful. Okay, so now I'm just going to run through the questions really quick, make sure we didn't forget anything. Make sure you can understand and get all the right answers. So, which allowable filing status is most advantageous to Samantha? Well, we covered that at the beginning. It was the qualifying widower with a dependent. We went through that decision tree. I don't know if you remember that. It was a while ago. Howard is Samantha's qualifying person for which of the following benefits? We talked about this. He doesn't qualify for the dependency exemption, not the child tax care credit, but he did qualify for the earned income credit. What is the credit for child and dependent care expenses shown in tax and credits section of Samantha's tax return? Well, let's go look. So we're going to go to the credit section, which will be on the second page. Okay. So we have, here are some of our credits. Got the American Opportunity Credit. Where did it go? Wait, what was it asking for? Credit for child and dependent care. I've lost it. Where did it go? Wow. Oh, my bad. It's actually up higher here. For credit for child and dependent care expenses. So it's line 49. It's 600. So that's an option. 600D. What was the total amount for qualifying educational expenses used for the calculation of Samantha's American Opportunity Credit? We calculated that earlier. Remember, it was the expense of tuition and books minus the scholarships, so it was $3,800. The amount of self-employment tax, well, let's go check. Oh, wrong one. Self-employment tax, we can see that here. It just happens to be right under where we were, line 57, self-employment tax, the 148, there, C. Samantha's unemployment income does not need to be reported on her return. That is false. We did include it on her return because it is income. Whether it's taxed or not is a different story, but it does need to be included. So then the cancellation of the debt, where is that reported? Well, let's go look. I think that'll be on the first page because that's actually a type of income. So we can see here, other income, the 1099-C, that was the cancellation of the debt, $800. And then, so that's line 21 there, C. Samantha qualifies for an exemption to the 10% additional tax on the early distribution from her IRA. So that was when we had to look in the 4012 for that. A long list of things that are exempt, and qualified education plans was one of them. So true, it is exempt from that 10% additional tax. So that is all the questions. I hope that was helpful and I didn't swerve around too much for you. But good luck with the test, and I'm excited for you to be volunteering with VITA.